to a pretty basic strategy that was actually built before World War II, and there's a lot of books on it. And Chris, our studious friend Chris here. So so a little bit background. I've actually known about Ichimoku for a long. Thought it was, but more to Chris, I've come to a lot of really for
Is Gadget cutting out for
beginner
anybody else,
trading.
or is it just me?
You're cutting
Yeah.
out, Gadget.
Oh no, I'm cutting. Hold on. Damn. Um,
Is my Can you see my trading view now? Out of interest, anybody who's watching this?
Yeah.
Okay, good.
Yeah, I see it live. It's
Just ironing out the
scrolling and everything. You're
technical
good.
issues. Nice.
is that better?
Yeah, just
Can you guys hear me?
yeah, I can hear you now. Yeah.
Okay. So welcome to the training session. We're gonna do so. If everyone just keep their mics muted while Chris is doing his thing, that'd be cool. And then we'll do questions and stuff later on. So a little bit background on just like mindset while doing TA is, always keep a open mind to bull case and bear case. None of us are fortune tellers. None of us can tell what's going on. We can't adapt to new situations or what's going on geopolitically as it comes into the market. Um, but you can kind of investigate charts and you can start building up evidence, so as like literally like a detective or like something like that, where we have to build the case, and you can sometimes lean one way or the other on where a chart's going. And so one thing that we're going to talk about as well is stage analysis at some point. Maybe we'll do a little bit of that today, Chris. I don't know.
Yeah, we can definitely mention that.
Perfect. Awesome. Because I'm out right now, so like I kind of messed up, guys. I'm sorry, but I'm here in spirit. But
Yeah, that's totally okay. There's a ton of material to cover. We'll be able to bore people to death well before the end of the stream. So yeah, no worries on that front.
yeah, okay, cool. And yeah, Chris is a good teacher. He's taught me a lot. I hope I've taught him a lot.
Absolutely.
And that's the whole thing is we're all here just trying to help each other get better, and it doesn't matter if you just started trading yesterday or if you've been trading for 20 years. Everyone should be always on a path to like trying to learn something new, because the market always adapts and it always changes. So if you always keep training the exact same, if you keep trading the same way for 20 years, it's going to eventually not work out for you. So you always have to be learning new skills, learning where the market's headed, and da 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 da. So it's very, very, very important. And I'll leave it at that for now. And I'll just kind of like do admin stuff. So I'm gonna leave. So Chris, I'm gonna be on
Yep.
mute, but I'm gonna leave. I'll leave a headphone in.
Yep.
Um,
Perfect.
and if you guys need me, if anyone has anything, just DM me. And other than that, Chris, if you have anything that you need me to do, either
Yeah.
just like say something and hopefully I react to it. And if not, just somebody send me a DM.
That's
Okay.
perfect. Yeah, thanks for that, Gadget.
Okay.
So
And I'll go on mute for now then.
yeah, perfect. Thanks. So I'm going to start from the beginning. I don't want to sort of assume that uh, I'll just mute Gadget for a second here. Just shout if you need me there. So yeah. Okay, so I'm not going to assume that anybody sort of really knows anything about TA. I want to kind of start from the beginning, because this should be relevant to as many people as possible for as long as possible. We are kind of talking about making this into a series of videos, so there'll be lots of material to come back to in the future. But we'll start with the basics. And I know Lifted there mentioned that he's reasonably acquainted with it, but there's lots of problems online in terms of how it's presented to people and such. So I've got a couple of sort of primary objectives for what I want us to be able to achieve by the end of this sort of really casual, beginner friendly entry. And so let's not beat around the bush. Let's get started. So I wanted to do kind of a basic introduction to Ichimoku. There's three elements of that. So number one, what is Ichimoku? Number two, how can it improve your trading and improve your technical analysis? And then the third section of this will be some easy beginners trading strategies to just to get you out of the gate. Some of you will be familiar with them, some of you may not be, but you know, we're all on the same journey here. We're all going to be learning as we go. So let's get the ball rolling, and we'll start out with what is Ichimoku. We'll give you a little bit of background to it, and maybe that'll explain, you know, why I call myself Ikrismoku or Chrisimoku, and maybe you'll understand why I'm quite enthusiastic about it. So what is it? Is it an indicator? Is it a trading system? Or is it both? So it's one of the oldest indicators around. It was created in the 1930s in Japan by a Japanese journalist called Goichi Hosoda, and this was obviously well before computers were widely available. And the numbers that Ichimoku is based on are 9, 26, and 52. They were calculated to provide the most optimized results by Goichi and his successful corralling of many hundreds of university students to do all the calculations by hand, because obviously they didn't have a bunch of computers to do it all for them. So the full name of Ichimoku is Ichimoku Kinko Hyo. Pardon my butchered Japanese there. But Ichi means one in Japanese, Moku means eye, and so the English equivalent of Ichimoku is the phrase at a glance. The next part of that, Kinko, means equilibrium or balance. And the last part of Ichimoku Kinko Hyo is Hyo, which is an old-fashioned word for chart. So Ichimoku charts are essentially market equilibrium at a glance charts. It's a bit clunky. So at first, it might be hard to believe that just by looking at an Ichimoku chart, you can simply glance at it and immediately have a sense for the state of the trend. But once you break it down into its constituent parts, into its components, and practice it, I do think it very quickly becomes second nature. And the fact that it is such a universal indicator, you can use it on copper, or you can use it on GameStop, you can use it on whatever you want, is just really, really powerful. So Ichimoku is a very unique indicator, and it does some things that no other indicator does. So it's unique in its ability to portray and depict the continuously shifting balance between buyers and sellers in the market, and it gives you that bird's eye kind of 10,000 foot overview in an instant. So as the process of price discovery takes place, you know, the glorified eBay auction that is the market, prices can swing very high, they can be very low. People's emotions, as you'll be able to see from my stream there, you know, range from hope to euphoria and complacency and denial and utter despair and capitulation and depression at the bottom there. So Ichimoku does a wonderful job of encapsulating all those things in a way that is maybe it's a little bit messy on the eye initially, but it is ultimately just 5 lines, and we'll get to that in the next part of this. So one of the other things that is really unique about Ichi, and that's not hyperbole, is the fact that it gives you a multi-temporal look at price action. So we are constantly at a glance, we're able to understand price action in the context of past price action, present price action, which ultimately goes on to create the forward Kumo, and the price action and obstacles and levels of support and resistance that will collide with in the future. So you have past, present, and future all in a single chart, as you'll be able to see on my stream there. So that's what Ichimoku is, and I hope that's, you know, please feel free to interrupt me at any time, and you know, it's not just a lecture from my side, you can just ask questions whenever. So that's the foundations of Ichimoku. So before getting into the stream, let's try and understand Ichimoku in the context of technical analysis, because it may not, the connections between it sort of may not be immediately obvious. So let's just talk about TA in general, get a bird's eye overview of TA for a moment. So technical analysis boils down to 5 simple things: trend, momentum, volatility, volume, and levels of support and resistance. And there's many thousands of different indicators on TradingView. I'm sure we're all familiar with all manner of inventive and creative tools and toys for examining price action, but there's many different ways to skin a cat, and ultimately they really all boil down to the same 5 different elements there. So in the context of TA, wouldn't it be nice if there were a single indicator that could do at least 3 out of these 5 things when it comes to technical analysis? Well, there is, and it's not really an indicator, or it is an indicator, but it's also many other things. It's a ready-made, self-contained, rules-based trend trading system, and that is obviously Ichimoku. So along with showing you the nature of the trend and the nuances of it and the context, it gives you reliable Fibonacci-based levels of support and resistance, which is something that isn't really commonly discussed. For example, you'll often find that the top of the cloud, Senko span A, in a pullback will be the 0.5 fib, so just a pullback in the context of an uptrend, just for example there. So it does contain Fibonacci, the Fibonacci outlook on things, and frankly, it does them better than I would. I mean, if you really want to break trends down into fibs, it can be quite messy. Ichimoku can draw those for you essentially in a very simple way, and we can come to that later when I get into the stream. So it gives you reliable fib-based levels of support and resistance, and some other special features involving the Chico span, as one of our friends here alluded to earlier, which is there to validate breakouts, measure momentum, and help protect you in markets that are constantly whipsawing one way or the other nowadays. I mean, it's been a very choppy market, and things like the Chico span there, Big Brother Itchy always trying to protect you from from getting into bad trades, and telling you when to get out as well. So what are the strengths of Ichimoku? Ichi clearly defines support and resistance. It identifies trend direction for you with Kumo breakouts, and simply examining the slope and the direction of the different constituent parts. It gauges momentum. It provides trading signals. It is the only system with a built-in forward-looking indicator. There are other ways of kind of looking at price action forward. I mean, you can look at volume, for example. That tends to be a leading indicator, but Ichi is unusual in that it projects levels of support and resistance into the future. Looking at Ichimoku charts on multiple time frames, and that's possibly something that could be its own episode because it's very advanced, offers an X-ray vision into the dynamics of any market. And Ichimoku also allows you to correctly time your entries and exits. So managing risk, in other words, it's got its own built-in risk management system there. So that I know that's a rather a word salad. That's a lot to take in. So if you have any questions, like, this is a great time to do it. If not, I'm just gonna head straight into the chart, and we'll take a look at Ichi, and we'll break it down for everybody. So if anybody has any questions, go for it. No?
Would you just use, when you use Itchy,
Yeah.
do you just use that, or do you use other kind of support lines and things on your own to confirm that too?
Yeah, that's a great question. So even sort of Ichi purists would actually normally say that There are certain things that you can add to it that will really help you, and one of those is trend lines, just simple chart patterns, broadening wedges, rising wedges, falling wedges, descending triangles, whatever you want to call it. Basic trend lines are extremely powerful and will add a lot to your Ichi trading. So yeah, super powerful. Highly recommend it. So with that said, let's get into the charts. So let's take a look at IBM here. Here's a little chart that I've prepared earlier. It's on the 4-hour time frame. The 4-hour should generally be seen as the starting point in terms of any Ichi analysis. Everything revolves around the 4-hour time frame because it's a nice compromise between the longer term and the shorter term. And obviously there's times to use the higher time frames, but when we're just initially trying to get a sense of what's going on the chart, we're looking at the 4-hour time frame here. So what I'm going to do, because I understand this probably looks pretty messy for people, I'll just turn all the constituent parts of Ichimoku off to begin with, and we'll just start with one single line here. So this is the Tenkan Sen. I'll try and use the Japanese phrases because I just think it's consistent. But it's the Tenkan Sen is the conversion line there, and the conversion line is well, Tenkan means conversion and Sen means line, so it's a conversion line, and it's a 9-period median average divided by 2, so the highest high and the lowest low divided by 2. There, just flash that on and off for you. Let's move on to the second line that constitutes Ichimoku. That's the baseline here. That's the Kijun Sen, or the kitchen sink, as some of my American friends like to call it. The Kijun Sen, Kijun means base, so the base Sen, the base line. In a ranging market, it can act as the center of gravity in a trend. And without wanting to get too far into the weeds, one of the Ichimoku is a trend trading system, and it likes to keep you out of trades that are not in a trend. It likes to keep you out of chop. But if you did want to trade chop, the Kijun Sen is what is going to allow you to do that, because it acts, instead of support and resistance, it will act as the center of gravity. And you'll see, actually I'll just show it you here and just draw it on a little bit. So if we were in a choppy market, what you would see is price oscillating up and down and up and down and up and down and up and down like that. So you can use Ichimoku in choppy markets, sideways markets. There, just think that's not something that a lot of people realize. So you got the conversion line, you got the baseline. Let's turn on the infamous Kumo, the cloud. Interestingly, Goichi Hosoda never actually called it the Kumo. There are no references to Kumo in the original texts. What he describes them as is zones of resistance. So a green cloud would be like a general zone of support. If you came down to it, you'd be likely to find support off it. And a red cloud, a negative Kumo, negative zone of resistance, would generally act as resistance if you bump into it. So there's the Kumo there. And so what is the Kumo? I mean, the Kumo is just essentially two median averages, the leading span A and the leading span B there. And in Japanese, they're the Senko span A and the Senko span B. And let's start with Senko span A, or leading span A here, which I'm flashing on and off there. So this light green color here. This is the average of the Tenkan. This is the Tenkan Sen and the Kijun Sen added together and divided by 2. So you get a slightly longer term look at trend and resistance there. And then you have leading span B, or Senko span B, under that. And what you'll notice is that the Senko span B here, it's the longest median average in Ichi. So if you're a bull, this is going to be the last chance saloon, so to speak, because if you break through it, things are going to get bad. Yeah, so it's a very reliable level of support and resistance. And what you'll also notice is that it has these. I'll just snap some lines on here. So you'll notice that it has these long plateaus like this, and these are where some of the most reliable levels of support and resistance come from, and you would draw them in from the highest time frames down. So you see these big plateaus on the higher time frames, you zoom in, and you'll see that magically price action is respecting these lines. So that's Senko span B there. That's a 52 period median average divided by 2. So that's a very, very powerful one. So what have we covered now? We covered the 1, 2, 3, 4 lines there. And I'll turn everything off for a second here, and we'll just focus on the infamous lagging span there, or the Chico span in green. And just for the record, you should always keep your Ichimoku settings set to the default 9, 26, and 52. A lot of time and effort and blood, sweat, and tears went into coming up with those numbers. And if you start altering them for things like crypto, for example, people are under the impression that if you shorten the averages, somehow you'll get faster responses and stuff. But it is a kind of a continuum, just like with any average. The longer you make it, the more reliable it is, and the shorter you make it, the less reliable it is. So it is very important to keep Ichimoku set to the default out-of-the-box settings there for maximum reliability. And also the Fibonacci levels don't work so reliably if you change them. So the lagging span here, the Chico span, is set back 25 bars from the present here. So this is the past, present, and future aspect that I was talking about there. So at a glance, we're able to see, we're able to understand price action in the present moment as it compares, in the context of price action as it has happened previously. So essentially, this is current price action here. You'll see how if I change price action to a line, they'll actually look identical. They're just set, the Chico span is simply set 25 bars behind. So what's the purpose of this? Well, what it's telling you in this example here is that current price action in the present as it stands is higher, is stronger, and has found support compared to price action historically back here. So when the Chico span initially broke this area of price action, that's called a Chico death cross there. So price action at that time, which would have been over here, cut through this, and then it cut upwards again. So the momentum is to the top side there. And the Chico span is there to keep you out of trouble, protect you from breakouts, protect you from failed breakouts and that kind of thing. So it's a very unique thing. I don't think there's anything else that really does that. So that's the Chico span there. So we've broken it down into the 5 constituent parts. Please, do feel free to interrupt me or ask any questions you want. If not, we can start looking at some trading strategies. And I don't know, I'll let all that sink in, and maybe we can have like a more free-form discussion at the end. Whichever you guys prefer is fine by me. So yeah, just let me know if you want to ask anything. So I'll turn everything back on now. So yes, it does look rather messy to begin with, but What's the next? What would be helpful to for people to understand next?
Chris, do you hear us?
Yeah. Oh, I can hear you now. Yeah.
Oh yeah, Cons had a question.
Oh, who had a question? Sorry, I may have muted somebody. Sorry. Go ahead. Go ahead, Cons. I can hear you now. I had to mute a couple of people.
I guess he doesn't have.
Oh, he doesn't. Maybe I already answered his question there, Krusty. I don't know. Yeah, I had a bunch of people muted by accident. Actually, I didn't mean to do that. Oh well. Yeah, if you do have any questions, just shout. So yeah, I guess we can just kind of get into the picture of what's going on IBM here. So this is something that we were involved in on Friday. We could also look at Snapchat. That would be a really interesting one. And I guess the purpose of this right now is to give itchy newbies. I want to burn one picture into your brain, and that is, what does an uptrend look like? Because the majority of retail is, bullishly biased. We're looking to buy things and for the price to go up, essentially, and hopefully to keep going up. So what does an itchy breakout look like, and what are some of the trading strategies that we can use to ride these trends? So we'll just call this the anatomy of a breakout here, and we'll run it from. I'll use the replay feature here, and let's pretend that it is the 22nd of or the 24th of November 2021 here. And what I'll try and achieve by showing you this is that you can read. Is that Ichimoku allows you to read the trend in the same way that you would read a book. And everybody has 2020 hindsight. It's very easy to look back on things and say, oh, why didn't I buy it here? Why didn't I sell it there? But unfortunately we have to play the trend in real time. We do have to make those decisions in real time. It is tough. So yeah, so I'll play this slowly, and we'll watch an Ichimoku breakout sort of in real time, so to speak. And I'll try and play it slowly. I will pause it regularly so I can explain what's going on in the breakout, where you would buy, and ultimately how you would manage your risk as well, because it does allow you to do all of those things. So, all right, let's load this up. That's a little bit fast. Okay. So just watch along, and the first thing I would draw your attention to is to be always looking forwards, always be looking to your right and looking to your left. So I'll try not to pause it too much, but as we're watching this, keep this in mind. You are looking to the left, you're looking at the Chico span there and what that's doing and how it's interacting with price action, what it's going to collide with. Is it going to cross price action? Is it going to get rejected from price action and roll over? Is it going to be strong? Is it going to cut through price action like this and then cut through the Tenkan Sen and then maybe even cut through the Kijun Sen and ultimately cut through Senko span A and through Senko span B there. So back on the on the 12th of or 11th of November there, you're probably feeling pretty sad about your decision to invest in IBM there. But yeah, so always be looking to the right, always be looking in front of you, always be looking behind you, and be keeping an eye on the present, obviously. So let's just see how this plays out. There we go. Okay, so here's your first cross there. There's a little Tenkan Kijun-sen cross. It is below the cloud. If it's below the cloud, you give it a rating of its strength. So a Tenkan Kijun-sen cross below the cloud would be the weakest, the lowest quality of buy signal. It's potentially just there to tell you that, hold up, maybe you should be paying attention here. Something could potentially happen. And we should also keep an eye on the Kumo on the cloud as it develops. As you can see here, the thickness of the resistance above you is actually beginning to thin out. So what were very, very thick bearish clouds above you are beginning to thin out there. So the chances of a breakout, may be starting to move in the bull's favor here. And what price really likes to do is it likes to find the weak spot in resistance, because price likes to pass through the path of least resistance there. So always be keeping an eye on these thin areas of the cloud, because those are the lowest areas of resistance if you're below it, and the weakest areas of support if you're above it, because price likes to jump through there and get everybody wrecked. So let's just see how this played out. Okay, so an initial wick into resistance there, could be a rejection. The Chico span is probing the Tenkan Sen there. It's not definitive, but things are starting to look a little better for the bulls. Let's see how this goes. So you're in this bearish Kumo here. The momentum is arguably still with the bears. It's sucking the energy out of this initial push into resistance, but we'll see how it goes. There we go. Something happened here. You had the first Kumo twist. So the Senko span A here is moving upwards faster than the Senko span B. And it's that twist that gives the clouds either their bearish or their bullish colors. So you've had that longer term average begin to move in the favor of the bulls there. And I'll talk about this in a second, but also keep an eye on this trend breakdown arrow here, and especially this angle here. It's around 50 degrees. So in a healthy breakout, an uptrend would be in the range of 35 to 50 degrees, 50, higher than that if it's really parabolic. An optimal, sustainable, non-parabolic uptrend would be in the way of about 45 degrees. So just keep an eye on that. Okay, interesting. So the Chico span has been rejected from the cloud there. If you're a cautious bull, you would not have bought below the cloud. You'd be waiting for it to pass through the Kumo and maybe find support down here, for example, but we'll see how it plays out. So after an initial rejection, okay, initial rejection there, you can see that price action has managed to pass through the Kumo. The Kijun Sen is pointing upwards. The forward Kumo, again, is pointing upwards like this. This is looking very, very strong for the bulls. This might be a moment where it would be useful to turn on your volume, because it's obviously very important to understand the strength of a breakout in the context of, is this a breakout on absolutely no volume? That's very likely to fail. If it's on high volume, is it lots and lots of healthy buying volume there? Is there lots of people want to get their hands on the asset? So far this is looking like a pretty healthy uptrend. If you're short IBN at this point, you're really, really sweating. You're getting very, very nervous because you see the Chico span here. This is your last chance saloon as a short. If price breaks above this 128.32 level, you're pretty much toast as a shorter there, or you have a very high tolerance for risk. So we'll just see how things played out here. Okay, lucky little reprieve there for the shorts, but the momentum of the trend here is very strong. Price action seems to be finding support on the Tenkan Sen there. The Kijun Sen is pointing, I think that's sideways at the moment. So there's a little bit of sidewaysness coming in here. Let's see how it played out. Okay, so if you're short IBM now, you must hate money, I guess. And just watch that nice healthy 45-degree angle uptrend play out. Look at the splay, look at the distance of price action from support here. This isn't parabolic, this is nice and sustainable. And also look at the thickening Kumo cloud here. So what this is telling you is that the momentum is not only behind the bulls, it's actually growing. So these longer term averages are gradually beginning to separate as the trend strengthens there. So a big wick back down to support here. You would be managing your risk using these flat areas of the Kijun-sen. This is the risk management aspect of Ichi that is built into it. So you could have entered at the Kumo breakout down here. Maybe you can move your trailing stop up to break even around one of these plateaus like this or here. Give it a little bit of breathing room there so you don't get knocked out. See if price action comes back to support here at 133. It did, it found support. Broke it. Had a death cross here, but this is a death cross in the context of a strong prevailing uptrend. So this is where Ichimoku can, or you can customize it in accordance with your own levels of risk aversion or risk tolerance here. So a complete paper hands Portnoy, so to speak, would probably exit the trade if it breaks the Tenkan Sen under, in highly volatile assets like crypto, for example. If you're playing ApeCoin or something, then it's going to be very highly volatile. It could whipsaw you out. Could be very hard to handle. If it breaks the short-term Tenkan Sen, maybe that would be a good place to get out. If your risk tolerance is higher than that, you can simply say, well, I'm in the trade until such time as price action breaks the medium-term support here in the form of the Kijun-sen. Or for the highest levels of risk tolerance, you could use the bottom of the cloud here for for setting your stops. And you can simply say, well, I'm in it to win it. I really, really like IBM or ApeCoin, and I'm going to stay in it for as long. I'm going to stay with this trend for as long as possible. So as this is unfolding, I do see Senko Span A starting to roll over here. We'll have to see if there's going to be a Kumo twist down here, as that would be rather a bearish signal there. But ultimately, momentum is on the side of the bulls here. It's very highly likely that price action is going to find support at that Kumo if it comes down there. So let's keep going with it. Finding support on the Tenkan, that's very bullish. Finding support on the cloud, that's still bullish. Sinking into the cloud. Okay, so for the second most risk-on group of people would have exited at this point. If you're extremely bullish on IBM, you could say, well, this could be a fake out. This is still fake out territory. Why is it fake out territory? Because of the Chico span, and that's why you should never turn it off like many of the people on YouTube assert that you should. So current price action is still respecting these levels of support. Still respecting these levels of support that have been set in the past there. So you could say this is a high conviction trade. I think IBM is going to do very well. Maybe the higher time frames, maybe the daily, the weekly, the monthly even, are all supporting my bullish hypothesis. I'm going to stick with it. I think this is a fake out on behalf of the shorts there, so I'm going to stick with that. So let's see how that fared for people. Okay, there you go. So if you went short here, and this is an uptrend, you probably just got stopped out. very, very powerful moves. There was a negative Kumo twist, but you are, as long as price action is within the cloud, it's inconclusive. It's not really trending one way or the other. Ichimoku would discourage you from getting into trades that are trendless, that are in the cloud like this. But we're already in it, so let's see how it plays out. So this is consolidation here, consolidation. Let's see if there are any interesting, I think I can see some chart patterns potentially emerging here. And this is why chart patterns are really, really important to take into account, and trend lines, especially when we're using Ichi. So let's draw on a little, what could this be? Does this have the potential of being some kind of a bull flag here? And let's see how price action respects this potential formation. So, but the what this appears to be is consolidation, is compression. Price action is beginning to move in a tighter, narrower range. The energy is building up potentially for the next move up. Could it have been a rising wedge, perhaps? Was it divergent? This is a good time where you'd be checking the RSI. Are you or you'd be checking the volume? Are you moving up on very low volume? Is the RSI bearishly divergent? Is it making lower lows as price makes higher highs? These are all things to be taken into account. You are at support here. The medium term momentum is still to the top side. The Kijun-sen is pointing upwards. The short-term conversion line is to the downside, but you are maintaining this level of support. This is a strong area of support here, formed over a number of 4-hour candles, and it's projecting this in front of you now. So on the 10th of February there at 1:30 that no matter what happens, 133.24 is highly likely to keep you safe as a bull, and you can update your stop loss to that point. So let's see how this plays out. Okay, looks like a pullback, big pullback. Let's see how this worked. So the Chico span validated this breakout. What happens next? And this is another important aspect to take into account, is that whilst you're looking at price action like this, you're going to be feeling a lot of emotions, and emotional management is very important for managing your trades. And just to draw your attention to this, this is referencing the weekly chart, but these emotional patterns are fractal in nature. You can go down to the 6-minute chart and people will still be feeling exactly the same things, optimism and euphoria and so on. So it's good to kind of keep an objective eye on the market in terms of emotions there. So if you were a bull there and it broke that 131.53, you would have sold. So let's do the important thing, and let's figure out how much money we would have made from that. So let's say you bought at once it broke the Kumo here, and you exited once it broke the Kijun-sen there, you'd have made 8.5%. If you were very risk averse, you could have made 10% because you would have exited when the price action cut through the Tenkan Sen here. So this is looking like a very nasty pullback. If you're a bull, you'd probably want to just sit out and keep out the way. So you're well below the clouds here, but it's not a strong downtrend. Things are still moving sideways. The conversion line is pointing upwards. The cloud is starting to point sideways here. So look at the angle of that. This is starting to point sideways. This isn't an extremely strong downtrend here. Perhaps a little fake out going on there with the Kijun pointing down and the Tenkan pointing up. Price action finding support on the Kijun-sen again. There's a degree of confluence between the bottom of the cloud here. So clearly the bulls are defending 124.19 to 123.59. This is some kind of a buying zone there, demand zone. Price action starting to push back upwards. As this is happening, we should always be asking ourselves what's happening in the past, what's happening in the future. So the bearishness is starting to fade off a little bit. The Chico span is starting to sever the Kijun-sen there. And as I say, we're always looking forward. So what is the Chico span going to be encountering as time moves forwards here? There is going to be the potential for an area of low resistance through which price action is able to pass. But we do have to, as Investor Gadget alluded to at the beginning of this session, we have to be skeptical. Trends are guilty until proven innocent, and that we will segue into that kind of stage analysis aspect of that later on, where we look at the 30-week moving average. We try to understand things in the context of the 30-week moving average. If it's below that, we are somewhat biased to the bear side. If it's above that, we've got some bias to the upside. Trying to break through, finding some support. Low area of resistance here. Beginning to look like a successful breakout there with the cloud in your favor. If you are a breakout trader, this is a really important lesson. So price action has made its way through an area of low resistance. Obviously, we don't buy the breakout, we buy the retest of the breakout, because price action doesn't just like to go parabolic, except in some cryptos. It likes to break through. It likes to retest the area that it's just come from, and that's how you get a good deal on it. Could also be sort of deploying our fibs and stuff at this point and asking ourselves what is the strength of this? How far are we retracing? So from the low there, the swing low, to the swing high, you're actually at the 382 there. So you have confluence in two different ways. You have the 382 at 129 there, seeming to provide support to the Chico span, and you also have Senko span B at the top of the cloud here, acting as support underneath you. So I mean, you could turn off Ichi if you wanted there. I mean, you could just use fibs, but Ichi is trying to make your life easier. So this is kind of one of the reasons that I enjoy using Ichi a lot there. It's just making things simple. Don't have to keep redrawing things all the time. And obviously, Ichi does actually take into account Fibonacci there. So this is starting to look like a very sideways trend here. So, and then there's a remarkable breakout there. I imagine that was probably a gap up overnight. It was, yeah. So in terms of these big gaps up, there are ways of dealing with that. Investor Gadget is very, very well qualified to explain that to people. What I would be doing is looking on the lower time frames, be looking for Bollinger Band squeezes, things like that. Some evidence to show that price is compressing, and market makers are up to something. They're being sneaky, because that's what they like to do. So we'll just see how the end of this plays out. And that's where we are today. There's just one more thing that I'd draw people's attention to here in terms of the utility of the Chico span. I may try changing the time frame to make it a little bit more obvious there. So we go down to the 130 minute. There are good reasons why I'm using the 6, 15, 30, 65, 130 and 195 there. And without going too far into the weeds, it's to do with the number of minutes in the trading week, which is 1,950. So we're using time frames that subdivide into 1950 evenly. We don't have a lot of candles, choppy, half-finished candles cluttering up the place and distorting the picture of the trend for us. So that aside, one of the many uses of the Chico span here is that although I will agree it's relatively obvious what kind of formation is forming here on price action, there will be many times when the Chico span in particularly choppy, difficult to read price action will give you a nice clean look at a formation. So in this pardon me. So in this context, obviously it's painting a head and shoulders for you on the chart there. So it's really trying to make your life easy in as many ways as possible. So I'll just add one last thing to that, which is in terms of the trading strategies. I know this is a lot to take in. There are 5 different trading strategies that traditionally people rely on. Those are Tenkan Kijun crosses. So where we started out here, that is a Tenkan Kijun Sen cross. Then there are Kumo breakouts, where price action breaks above a significant level of resistance, and the bulls are so keen to to drive the price up that you get this consolidation here, and when resistance finally breaks, it breaks very powerfully, very distinctively in a single direction, and then you get that bull run. So that's Kumo breakouts. My favorite simple itchy strategy is kind of a amalgamation of the two, where I wouldn't specifically look for Tenkan Kijun Sen crosses. I would actually just look for Kijun Sen crosses on their own here, because I find them to be quite reliable, quite powerful. I am very interested to find other means of confirming that. So I'd be looking at Bollinger Bands. I would be looking at volume, make sure that the breakout's not happening on very low volume, that kind of thing. So that's the Kijun Sen crosses. Chico breakouts are a slightly less well known, more esoteric way of looking at it, where you would simply say, let's maybe rewind slightly. We don't need to rewind, but so when we were back here and we saw that this Kumo breakout was happening, we could have been looking left and saying, oh, hey, look, the Chico span is breaking through resistance there. So current price action in the present time is overcoming resistance that was created previously, and the buyers are firmly in control of the trend there. And the last one, which I feel is quite a slow strategy, but some people like it, is simply the Kumo twists here. So you can see that the longest term averages were beginning to move in the bull's favor. Again, we can measure this back and see at what point in time the Kumo twisted. We go back 25 or 26 bars here. So back here, when you were breaking out of resistance here, you'd have been looking forward and you'd say, oh, hey, I've got confluence here. I have managed to overcome resistance at Senko span B, and the Kumo twist is providing me with additional confidence that we're going to have a nice healthy breakout here. And this segues or circles back to what I was talking about in the beginning about what an uptrend looks like, because it's all very well and good to say, oh, higher highs, higher lows, but one of the beautiful things about Ichimoku is that is a kind of uniformity or McDonald'sization, if I can just make up a word there, where every trend looks very similar to every other. So price action can be very messy. It can come in many different permutations. It can have many different patterns. What Ichi does is to take all of that noise using median averages to boil things down in such a way, in a very cookie cutter kind of way, that with practice, because this will take practice if you want to use it, you can simply say at a glance when you were back here on the 6th of December that this is looking very, very bullish. I know exactly where to manage my risk. I'm looking forward. I'm being anticipatory rather than reactive to price action, because anticipating moves is obviously where the real money is made rather than constantly being reactive to things. So that's just a brief breakdown of kind of 5 easy Ichimoku trading strategies there. So take a deep breath. I know I must have completely overwhelmed everybody with information there. As I say, all this will be recorded, so you can refer back to it as many times as you like, and you are more than welcome to DM me. You can find me at Zero Hype TA on Twitter. You can ask me any itchy questions, any itchy questions that you want to ask there. It is my pleasure to explain Ichimoku to people. I do feel it's very underutilized. There's many kind of half-baked indicators out there charging people hundreds of dollars a month when Ichi is far superior to it, and it is free, and you don't need to pay anybody a penny there. So yeah, I will stop talking there. I've overloaded everybody's brains enough. I'll throw the floor open. If you want to say anything, if you think this was rubbish, just let me know. If you think it was really useful, I'm happy to hear that as well. Or if you just want to ask anything about Ichimoku or TA at all, now's your opportunity. If not, I'll just record it and we'll chuck it on YouTube, and you can spend some time digesting it. And I'll probably throw things back to Gadget there, or if he's still here, he may not even be here at the moment.
I have a question.
Awesome, thanks, Lifted. What's up?
Yeah. So how see the best way to word this. How reliably is it on the lower time frames, like the 6, the
Yeah.
15, stuff like that?
Yeah.
Because most indicator strategies obviously get more accurate with the higher time frames.
Yeah.
Due to whipsaw and stuff like that.
Yeah. Yeah, that's a really excellent question, and it's a very common one, and it kind of circles back to the some might say misconceptions or misunderstandings about Ichi. So let's go down to I don't know if can I get rid of all my drawings, or do I have to? I'll just get rid of my drawings. So we'll go down to we'll go down to a short time frame. Let's say the 6-minute time frame. I think that should be. I don't tend to look at time frames lower than that. And the common criticism of Ichi is that it's some people would say that it's reactive, or that it's somewhat of a kind of lumbering beast in terms of indicators or trading strategies. But I think if I showed you an example on the 6 minutes here, you'd see. In fact, we could even we'll take something completely. We'll take something very quick moving, something that is quite vicious even. Something that would really require you to babysit the trend and monitor it on low time frames, and that we would traditionally think that like modern Western indicators and so on would be more adept at handling. So let's say Bitcoin. Let's have a look at Bitcoin here. Bitcoin USD. There we go. And we'll just do it at the 15-minute time frame so it's not too messy to look at. So let's have a look at this. So this is a 15-minute time frame. This is Bitcoin here, and this kind of goes back to the cookie cutter uniformity aspect of Ichimoku, in the sense that whether you are on the weekly time frame, like so, on on Bitcoin here, going all the way back to 2018. So whether you're on the weekly time frame there, the daily time frame there, the 4-hour, all the way down to the 15 minutes here, the principles of it, whether you're playing a trend on you can even use Ichi on tick charts if you wanted, like 10 tick and whatever. I don't really advise it because it's more for high frequency trading algorithms than humans. But the time frame actually really doesn't matter. It is effective on all time frames. And if we do go down to the 15-minute on Bitcoin here, there's two ways that we could have played it. It's good to look at uptrends and it's good to look at downtrends. So let's perhaps look at Bitcoin in terms of, let's say that we're bearish on Bitcoin here and we're looking for opportunities to get short Bitcoin. It's on the 15-minute time frame, and get my crayons out. So the principles are exactly the same no matter what time frame you're on here. And let's just draw a diagonal line through there and just ask ourselves what happened without going into too much detail. You had a death cross, passed through a low area, an area of low support there. Kumo twist pointing very sharply to the downside. Chico span validated the breakout to the downside. This was your last hope at 42,590 there. And if we use the cloud as our trailing stop, let's measure the profit from that conservatively here. This would have been a fairly low risk play. Let's just measure that, and we will remain in the trade until such time as the trend ends. The trend is the friend. The trend is our friend until the end, and until price action ultimately broke the cloud again there. So that's a 5.5% move. Remember, we're playing this on the 15-minute time frame. Depending on your risk tolerance, again, because we are customizing our approach to using Ichi in line with our own sense of how much risk we can tolerate. You could have simply said, I'm in the trade until such time as we break the Kijun Sen. That would have been a nice happy medium there. So as soon it only violated the Kijun Sen way down here, all the way down here at 39,469. So that's a nice 7% move. So to circle back to your question there, lifted, can you use it on these lower time frames? Is it responsive enough to be used on those lower time frames? And I would argue yes, it is, and it really doesn't matter what time frame you're on, as long as you are applying it, you're applying Ichimoku in the way that it is intended to be applied. So you avoid choppy markets unless you specifically want to trade it, in that Kijun Sen oscillating method I described earlier. But you only want to be in a trade when there is a clear direction for the trend to go in. And this does kind of relate to some of the criticisms that people have of Ichimoku, mostly that people are actually very impatient and they want to get into a trade immediately. And when Ichimoku isn't immediately amenable to saying yes, put your money here now, they get frustrated with it. But the truth is that Ichimoku is always there trying to keep you out of bad trades, trying to help you hedge your risk, manage your risk, and to ultimately be on the right side of the trade. So yeah, to answer your question there in a very wordy way, this is on the 15-minute time frame. That's a pretty reasonable low time frame, I would say, to be managing a trade, and one that is particularly volatile. And yet Ichimoku did prove itself to be up to the task despite being almost 100 years old. So I hope that answered your question there. Probably, I think I can sense some stunned silence setting in there. So if nobody has any other questions, I'll probably draw a line under it there. But yeah, as I say, you can definitely reach out to me whenever you want, and I'll do my very best, either here on Discord, on Trade the Chart, or on my own Discord, TA and Chill. Just add me as a friend or whatever, and see if I can explain anything to you or help work things out. So yeah, thanks a lot for
I
joining.
have 2 questions.
Yeah, go ahead,
If
Cons.
you
Yeah,
have time.
yeah, absolutely.
Yeah. The first question is how is the Chico span calculated? I've seen explanation for the other lines
Yeah.
how they're calculated, but there are a bunch of momentum indicators.
Yeah.
And wondering how this one is arrived
Yeah,
at.
so the Chico span's super simple. As I say, this is all recorded. I'll put it on YouTube later, so you can watch it back as many times as you need. So let's just take off the other. We'll take off the conversion line, baseline, leading span. We'll just leave the background of the Kumo there, the background of the cloud. I'll get rid of my drawings, and we'll just measure this out for you. So number one, you see how price action looks a lot like the Chico span? Looks very similar. Well, that's because if you just draw a ruler from the current candle backwards, there it's 25 bars. So it's really just price action set back 25 bars in the past there. And that's just to help you, to give you that greater kind of temporal context in which price action is happening. So you're comparing price action as it stands in the present to how it played out back here, for example. So what was significant about the level of 39,450 back there? So yeah, to answer your question, it's simply price action set back 25 periods. Super simple.
And thanks. And the second question is regarding the crosses.
Yeah.
Say a down move is crossing a green cloud to the upside. Is it still considered resistance, like it was the case for the red cloud, or it has different meaning?
Do you mean do the crosses have a different meaning depending on the color of the cloud that they're passing through? Is that what you're
Yes.
asking? Yeah.
Well, yes.
Yeah. I think that's a good question. I mean, it's not something that gets talked about in books on Ichimoku very much. But in my experience, I would simply take it into account. I would say passing through an area of resistance, of bearish resistance like that, is much more likely to weigh on price action. So it's basically it's harder for price action to pass through these thick red areas than it is for the bulls to pass through an area with no cloud like this, or yeah, if you were bullish on it like this, for example, back here. This is favorable to the bulls. So the green Kumo cloud there means that there's just that little bit less weight hanging around the necks of the bulls as they're trying to push price upwards. So yeah, basically the red Kumo favors the bears somewhat. It's going to sap the energy of the bulls as they try and push through it. And conversely, if it's a green cloud, it's much more likely that the breakout's gonna succeed. But that's just one aspect of it. And the important thing to remember is that every component, individual constituent of Ichimoku must be understood in the context of its four other constituents. So you never simply look at the Tenkan Sen on its own, the Kijun Sen on its own, price action on its own. Price action has to be understood in the context of its distance away from the other parts of it there. So yeah, I hope that answered your question there, Cons.
Yes, probably. I'm not sure if there is an area here that actually covers the scenario that I tried to point
Yeah,
out. So
yeah,
we have a down move,
yeah.
initial down move
Yeah, I
that
can find a down
tries
move like
to.
this one, right?
No, I mean it's a down move,
Yeah.
which then turned around, turned into an up move, trying to cross into a green cloud.
Okay, a down move that
Cool.
crosses downwards then tries to move up into a green cloud. Yeah,
Yeah.
Okay.
That's the scenario. So if I understood correctly, if it's a green cloud, it's much
It's more likely to provide support underneath you. I think maybe that's a better way of putting it. If you like,
or in the case of piercing it on the way up,
yeah.
it is lighter resistance.
Yeah, exactly. Or it's more likely. So you break out of a bearish red cloud here, and then the green cloud is telling you that this is going to favor the bulls. So if price comes down to here, it's likely to bounce. So it goes up again, it comes down to here, it's likely to bounce.
The scenario I was referring to is right now to the left. Sorry, you just moved it to the left. Yeah, over there, right there.
Yeah.
You see that the big crash.
Yeah.
It stopped and then went up. No, a little bit further to the left.
Okay, here?
A little bit more. Yeah, that one.
Okay.
You see how it the move went through the green cloud.
Yes.
So that's the case I was referring to. So pretty much the bulls had easier time, so to speak.
It's giving you that a slight bias one way or the other. So the bears have tried to push it down here and failed. They found some support. The Chico span, as you can see, when this happened, let's measure it with a ruler. So we'll say from here when price tried to break down from the cloud. Let's look back 25 candles and see what it was doing. 15, 22, 23, 25. Actually, we'll find a better example where it bounced off the cloud. Let's say this example here, and we'll go forwards 25 candles. So 25 bars here. So okay, so this is. I'll just get rid of this circle for a second. So you see this part where the Chico span's finding support on the cloud, and you see here where price action has just broken very slightly underneath the cloud like that. What this is telling you is that current price action has managed to find a support that was created on a previous occasion there. So
I see. Yeah, that's useful. So basically, the Chico gave us a hint that this breakout it's short-lived and
yes.
probably.
Yeah, so if you were bearish on Bitcoin there, you just hate Bitcoin and you tried to short it from there, but the trend is trend is still pointing upwards. There's a lot of momentum still pointing upwards. You'd be very brave or very stupid to try and short it from there. Now, if price had gone instead of to 31.5 here, if it had broken down and the Chico span had gone below here, down to about 29,500, well then the bears would have really had a case, and the cloud would have rolled over like this, and you'd be ready to ride the trend to the downside like that, like this for example. So here you're having a fairly sideways kind of choppy. It's not really a very strong trend. This is basically moving in a range here. And the clouds are thinning, thicker, thick, 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 thin, 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 thin. Now there's just nothing supporting you basically, and then then it broke down. So yeah, just look at the clouds as a sentiment indicator. So nice, thick, fluffy green clouds, you're very likely to find support on them. Thick, heavy red Kumo clouds, they're very likely to act as resistance.
Thank you very much.
Yeah, no worries. All right, guys. Well, I will probably draw a line under it there. Yeah, please feel free to reach out whenever you want. And thank you so much for listening to me talk about Ichimoku in this study session today. I'm sure me and Gadget will be planning more of these in the future. So sign up, just ask Gadget, whatever, drop it in the chat there, and yeah, hope to see all of you soon, and thanks for joining.
Thank you very much, Chris, for taking your time to educate us on this.
Anytime, guys. Anytime, guys. It's my pleasure. Take it easy.
Every time I hear you talk about it, you sound very enthusiastic, and it really shows.
Thank you very much.